Charles with us on set for business news. He's starting with Uber. Now, this is a company that's had pretty contrasting fortunes, in fact, during the pandemic, hasn't it?
Yeah, that's right. I mean, unsurprisingly, more people staying at home means fewer people taking Ubers to travel places. But the company did manage to limit its losses by seeing a big increase in earnings from its food delivery business, Uber Eats. In the last 3 months of 2020, the company earned almost as much from deliveries as it did from passenger journeys. Erin Ogunkeye has the story.
2020 was supposed to be the year Uber finally turned a profit. But fewer journeys due to the coronavirus pandemic brought the ride-sharing giant yet another wave of losses. Though it did show some signs of improvement, partly because it cut nearly a quarter of its workforce last May. Uber posted $6.8 billion in losses in 2020 compared to $8.5 billion in 2019. Uber's CEO nonetheless expressed optimism about the company's future, expected to reflect the lifestyle changes brought on by the spread of COVID-19.
While 2020 certainly tested our resilience, it also dramatically accelerated our capabilities in local commerce, with our delivery business more than doubling over the year to a nearly $44 billion annual bookings run rate in December.
With an end to the pandemic not yet in sight, the company has expanded its food and drink services. In July of last year, it acquired delivery startup Postmates, which it will combine with its own subsidiary Uber Eats. And earlier this month, Uber announced plans to acquire Drizzly, a startup specialized in beer, wine, and spirit deliveries. Changes the company says put it well on track to turning a profit by the end of 2021.
A senior executive of the Chinese tech giant Tencent has been arrested over what the company says are allegations of personal corruption. It comes amid a major crackdown by Beijing on its homegrown internet platforms. The Wall Street Journal is reporting that the executive is under investigation for claims that he turned data over from Tencent's messaging service WeChat to a man who was formerly one of China's top law enforcement officials. The paper says investigators are looking at what kind of data may have been shared and what the former minister might have done with it.
Now, next for you to a post-Brexit market milestone.
The Amsterdam stock markets have surpassed London as Europe's largest share trading centre. That's as the Dutch city has won the business lost by Britain due to new trading rules post-Brexit. In January, the average daily volume of shares being traded in Amsterdam was 9.2 billion euros. That's compared to 8.6 billion for London. The move had been prompted by a ban on financial institutions that are based in the European Union from trading shares in the UK after the end of the Brexit transition period. And that's because the EU hasn't recognised UK exchanges as having the same supervisory status. The Financial Times quoting analysts saying that this won't mean a major shift of jobs out of London. Paris and Dublin also saw a rise in share trading in January.
Markets for you now on the programme. What's happening, Stephen?
Well, Euronext, which is the operator of the Amsterdam stock market, their shares are up 1% today, potentially partly boosted by that news that they have overtaken London, but also their latest annual results. Broadly speaking, just small gains across London, Paris and Frankfurt at the start of trading in Europe. In Asia, it's the start of the Chinese New Year holiday, so many markets closed. Shanghai closed to start their New Year's holidays. Tokyo and Seoul also closed for holidays in those countries, while it was a half day's trading in Hong Kong and Singapore, so generally pretty quiet down the markets there.
Now, investors have given the dating app, I think there's an app in that sentence, isn't there, Stephen?
Yes, there is,
Bumble, a warm welcome to the stock market.
Like to keep you on your toes.
Yes, I was thinking a dating Bumble? Dating app Bumble.
This is the initial public offering of shares from Bumble. It saw stocks in the company selling for a higher price than expected, valuing the firm at over $8 billion. The company raised $2.2 billion from investors with the share sale. Bumble made its mark on the dating app scene by allowing only women to make the first move. This IPO will heat up the competition between Bumble and the biggest player in the industry, which is Match, that owns Tinder and OkCupid.
And finally from Stephen, United Airlines we're going to talk about now. They made a big investment. This is about flying taxis, isn't it?
So the American carrier is going to spend $1 billion on electric aircraft to get passengers to and from the airport. It signed a deal with the startup Archer for 200 of these flying taxis, which the company says will be able to travel at up to 240 kilometres an hour. Archer's planning to begin production of the taxis in 2023, with public flights starting the following year. These vehicles will need regulatory approval and they'll have to meet the airline standards as well. Now, this overall is part of a move by airlines to try and cut emissions from flying and from the whole journey when people are travelling by air. United has pledged to become a carbon neutral airline by 2050.
Wow, that's a bit of a change, isn't it? Scary stuff. Well, not scary, just sort of
Different.
different. That's
Yes,
the word. Thank you very
exactly.
much.
Flying on your way to the airport,
Why not? Steve